Good afternoon. This is Brian Shannon from AlphaTrends.net. Today's Tuesday, the 6th of May, 2008. The market's closed. S&P 500 finished with a gain here today of just about $1, or 0.7%. You can see it came down intraday to its rising 10-day moving average, which is above the 20, and which is above a rising 50-day moving average. It found support there and trapped in some short sellers, most likely. The 140 level was also tested, so that's important to see that that has held in here. And when we look at a shorter term time frame, you can see that the pattern that I was pointing out yesterday of lower highs and lower lows was looking like it was going to continue here today early on, but the market gapped down on some news based on Fannie Mae and Freddie Mac, and then it came up through yesterday's little level of resistance right here just under 141, and the buyers really took control in there. So I think that, one of the hallmarks of a bull market is the ability for the market to shrug off bad news, to rally in the face of bad news. And if you look at Freddie Mac and Fannie Mae, you can see that these stocks gapped way lower in here today, but that was met with some buying. So when we take a look at the financials here in a moment, we'll take a closer look at that. I don't want to call it a bull market still, because we have this weekly time frame with the market just below that declining 200-day moving average, and that still does give us reason for concern. However, when the market starts to rally, you have to be behind it because otherwise it's going to run you over and you're going to be left with losses. And obviously, the trend is your friend in here. So today, on the 1-minute time frame, you can see that the buyers took control actually pretty quickly after that gap lower. And once it took out this little morning high in here and that daily VWAP began to move higher, it created a nice pattern of higher highs and higher lows, just like you like to see in a bull market. So on the daily time frame, when we look here, we've still got this market just below the declining 200-day moving average, and also still below that trend line and the December lows as well. So there's still reasons to be concerned. And if it sounds like I'm hedging myself, it is because I am hedging myself. When the primary trend on the weekly time frame still shows this declining 200-day moving average, then it tells you you have to be cautious. You want to trade in the direction of this trend, though. You can't fight it just because you see a bigger trend developing. It's up to you to decide which time frame you want to focus on and where, what trades to put on and how much risk to take. So the financials we will take a look at now. The financials were up 20 cents or 0.73%. You can see that this market is starting to stair step higher. It didn't go as low as it shows right here. It didn't come down and touch that 50-day moving average. I've got a bad tick on my chart, but you can see it came down, held above the 2650 level, where we were expecting our next level of support to be if it broke below 27. And now then the market, as it rallied, it took out yesterday afternoon's highs. That level became support, and now the market is looking fairly bullish here again. I still think that 27 will be important for the market to hold above. But if the market can, the financials can withstand, bad news from two key players, Fannie Mae and Freddie Mac, and continue to rally in the face of that, then it's showing that there's an underlying bid to this market, and you've got to pay attention to that. The Russell 2000, the IWM, came up to that 73 level once again today, but was unable to close above it. So we saw intraday that it got above the $73 level, but late in the day, a little bit of selling in there. So jury's still out in here. 73 continues to be a very important level. We've got this downtrend line that's been broken. If we go back a little bit further, though, you see that 200-day moving average is declining, and that's still a reason just to be overall concerned that perhaps there's bigger forces looming that may reveal themselves here over the next few weeks or so. The NASDAQ continues to be the strongest. It was up 0.62% today, rising, holding once again above that rising or flattening out now 200-day moving average. So that's important to see. We saw that the pattern of lower highs and lower lows in here was also interrupted. It took out yesterday afternoon's highs at about 48.75, and then we've got the market right back up to its recent highs in here, and again holding firmly above this trend line. So the NASDAQ remains the strongest.